And today, we've got a big one.
Absolutely. We're diving into a story that's got the tech world, the financial world, pretty much everyone buzzing. It's Intel.
Right. And if you were watching Intel, say, a few years back, this feels, well, almost unbelievable. Like seeing a ghost, but a very healthy one.
A very profitable ghost. On September 18th just now, Intel's stock didn't just tick up, it exploded. We saw, what, a 28.59% jump in pre-market?
Yeah, it hit $32.32.
Yeah.
And then it closed the day up 23%. That's massive for a company that size.
It really is. I mean, I remember the jokes, the Intel inside, a falling stock price kind of thing.
We all do. For years, it was tough going. They were seriously underperforming the S&P 500 over like a 5-year stretch.
They had a bit of a better run year to date recently, but nothing like this.
Exactly. This single-day surge feels different. It suggests something fundamental has shifted, a real inflection point maybe.
That's what we're here to unpack. Is this just a blip, or is it a genuine reset? We're looking at this huge convergence of things, a massive new partnership, serious government backing, some potentially game-changing tech.
It all seems to be hitting at once.
Right. And it's leading some people to talk about a, quote, generational buying opportunity for you, the investor. So let's dig in. What's driving this? What does it mean for Intel's future?
Well, the immediate spark, the thing that really lit the fuse on that stock jump, was a pretty stunning announcement from NVIDIA.
NVIDIA.
Okay.
Wow.
Yeah, they dropped the news. A $5 billion investment in Intel common stock.
Wow, $5 billion. From NVIDIA into Intel, that feels unexpected given they've been rivals in many areas.
Definitely turned heads.
Isn't there a risk for NVIDIA there? Tying themselves to Intel's turnaround, which, let's be honest, has been a long and difficult road. That's a lot of capital to bet on them getting it right this time.
That's a really good point, and it gets to the heart of why this is so strategic. It's not just NVIDIA parking some cash.
Yep.
They're actually acquiring about 4% of Intel. The purchase price was $23.28 per share.
Okay. How does that compare?
Well, it was a bit under Intel's close the day before, which was $24.90, but, and this is key, it's significantly higher than the price the U.S. government paid for its stake earlier. We'll get to that.
Interesting. So they paid a premium compared to the government.
Right. And like you said, this isn't just finance. Analysts are already calling it a historic collaboration. Some are saying it's one of the most significant partnerships the semiconductor industry has ever seen.
That's a big statement. I saw one analyst quote saying this will effectively reset Intel's position as an AI laggard to a cog in future AI infrastructure. From laggard to cog, that's a massive shift in perception.
It really is. It's potentially a lifeline for Intel's whole turnaround plan. It signals that maybe, just maybe, Intel is back in the main game for the future of computing.
Okay, so let's break down the strategy here. Why would NVIDIA, a company absolutely firing on all cylinders right now, make this kind of deep commitment to Intel? What's in it for them?
For NVIDIA, it really boils down to supply chain diversification. It's about risk management.
Okay.
They've been incredibly reliant on TSMC, a single foundry based in Taiwan. And, Taiwan's geopolitical situation is sensitive.
Understatement of the year.
Right. So this Intel partnership gives NVIDIA a high-performance, cutting-edge manufacturing option right here in the U.S.
So it's a hedge, a way to de-risk their manufacturing base.
Exactly. Reduces geopolitical exposure, gives them more leverage in negotiations down the line,
Right.
ensures they can keep getting the chips they need. It's smart.
Makes sense for NVIDIA. Now flip it. What about Intel? For years, everyone's been asking if their big foundry push, IDM 2.0, could actually attract major customers. How big a deal is landing NVIDIA?
Oh, for Intel, this is everything. It's the ultimate validation for IDM 2.0.
So IDM 2.0, just to remind everyone, that's where Intel makes its own chips, but also opens its factories, its fabs, to outside customers.
Precisely. And the big question mark was always, could they really land a whale? A leading-edge, high-volume customer for their most advanced processes.
And NVIDIA is definitely a whale.
The biggest whale, arguably, in terms of advanced chip demand right now. Securing them provides what the industry calls a leading-edge baseload for Intel's new fabs. Tells the world Intel's foundry is real, it's capable, and it's open for business at the highest level.
Okay, let's get into the tech weeds a bit, because this isn't just about money changing hands or fab space.
No.
They're talking deep collaboration. In the data center, Intel is actually going to make custom by 86 CPUs with NVIDIA's NVLink tech built in for NVIDIA's own AI platforms.
Yes, and this is huge strategically. Think about it. NVLink is NVIDIA's proprietary high-speed interconnect.
Right, it links their GPUs together.
Exactly. By integrating Intel CPUs into that exclusive ecosystem, NVIDIA is effectively making Intel its go-to by 86 partner for the AI data center. It's almost like a strategic checkmate against competitors.
So it pulls Intel CPUs right into the heart of NVIDIA's AI dominance.
Precisely. It puts Intel back on the map in that critical high-growth market where, frankly, they've been losing serious ground.
And it's not just the data center, right? There's a personal computing angle, too.
Yes, Intel is going to build by 86 SoCs system-on-chips that integrate NVIDIA RTX GPU chiplets.
So NVIDIA graphics tech inside an Intel chip package.
That's the idea. They're aiming to create a whole new category, the AI PC. It combines Intel's CPU know-how with NVIDIA's GPU leadership directly on the chip.
That sounds like a direct shot at competitors like AMD, especially in gaming and high-performance laptops.
It absolutely is. It could give Intel a really compelling edge there.
Yeah.
And importantly, this isn't just a one-off project.
Oh.
They've committed to developing multiple generations of these integrated products. That signals a really deep, long-term strategic alignment, not just a temporary fix.
So taking that $5 billion investment, the fact they paid more per share than the government, it feels like NVIDIA is shouting its confidence from the rooftops.
It's about as clear a signal as you can get. Total conviction that Intel's stock was undervalued and that this partnership is a genuine win-win. It's a massive vote of confidence in the turnaround, both financially and technologically.
Okay, and you mentioned the government's investment. Let's pivot to that because it feels like this Intel story isn't just corporate strategy anymore. It's become almost a matter of national interest.
That's absolutely right. The U.S. government's role here cannot be overstated. It's
Yeah.
provided a really critical financial backstop for Intel's ambitions.
This is mainly through the GPS Act funding, right?
Yes, that's a big part of it.
Yeah.
The Commerce Department awarded Intel up to $8.5 billion in direct funding.
Which is a huge number on its own.
And on top of that, access to another $11 billion in low-interest loans.
Plus, wasn't there an investment tax credit?
Correct. Up to 25% back on qualified investments. And Intel's planning to invest, over $100 billion over the next several years. So that tax credit is potentially massive.
It really paints a picture of strategic co-investment. The government isn't just handing out money, it's actively partnering for, national security. Building chip supply chains here.
That's exactly how it's framed. Building a resilient, secure semiconductor supply chain on U.S. soil. But then they took it a step further, something pretty unprecedented.
Which was?
The government actually became an equity partner. They bought a stake in Intel.
Wait, the U.S. government owns shares in Intel directly?
Directly. In a historic move, they acquired a 10% stake, valued initially at about $11 billion. The price was $20.47 per share.
And that made them the biggest shareholder at the time.
It did. Bigger than any institutional fund.
What does that mean, having Uncle Sam as your largest shareholder? Does it affect how Intel operates? Is there government control?
That was a big question. But the structure seems designed to avoid that. The government investment provides sort of a psychological floor for the stock price. It's a huge signal of confidence.
Okay.
But critically, the agreement states the government will be a passive owner. They vote their shares with the board recommendations.
So supportive, not controlling.
Exactly. It aligns interests the U.S. taxpayer benefits if Intel succeeds long-term, and Intel's tech is secured as a strategic national asset. Now, there was some political rhetoric, particularly from former President Trump, about complete ownership and control.
I remember that.
But the actual deal structure is explicitly hands-off operationally. It's designed to support the strategy, not dictate it. And this backing is crucial. It helps neutralize the cost advantages rivals have manufacturing in Asia, making Intel more competitive for domestic foundry customers.
Okay, so we've got this powerful NVIDIA partnership validating the strategy, and this unprecedented government backing, de-risking the finances and boosting competitiveness. But as always, it comes down to the tech. Can Intel actually deliver?
The million-dollar or maybe $100 billion question. This brings us back to IDM 2.0 and their really ambitious roadmap, 5 nodes in 4 years. They're trying to sprint back to technology leadership.
And the keynote everyone's watching is 18A?
That's the one. Intel 18A. It's slated for production readiness in 2025, and it really is the crown jewel. It's been called a bet the company technological leapfrog.
Bet the company. No pressure then. What makes 18A so special technically?
It's got 2 revolutionary industry-first technologies baked in, hitting the market at the same time. First is RibbonFET.
RibbonFET, that's their version of gate-all-around transistors.
Exactly. GAA.
Yeah.
It offers much better control over the transistor channel compared to the older FinFETs. This means faster switching speeds, less power leakage, better performance per watt, all critical for AI and high-performance chips.
Okay, that's one. What's the second?
The second is PowerVia. This is the industry's first implementation of backside power delivery.
Backside power. How does that work?
Traditionally, the power lines and the signal lines all run on the front side of the chip, competing for space. PowerVia moves the whole power delivery network to the back of the silicon wafer.
Okay. What does that buy you?
It frees up a ton of room on the front for better signal routing. Intel claims this alone can give up to a 15% improvement in performance per watt and, get this, a potential 30% gain in chip density. More transistors in the same area.
Wow. Okay, so Intel's bringing both RibbonFET and PowerVia online with 18A in 2025. How does that stack up against, say, TSMC?
That's the key differentiator. TSMC is moving to GAA around the same time frame, but their backside power solution isn't expected until a later node. Intel is doing both simultaneously. If they execute, 18A could give them a real, tangible performance and efficiency lead.
If they execute is always the big caveat with these complex nodes. But that does sound like a potential edge. But couldn't TSMC just, speed up their own plans or cut prices to keep customers locked in? How durable is this potential advantage?
That's the competitive response risk, absolutely. TSMC won't stand still. But launching both RibbonFET and PowerVia together is a big move. It creates a combined advantage that might take competitors time to replicate fully.
And the NVIDIA deal helps here too.
Massively. The Intel NVIDIA alliance builds a really strong competitive moat. You've got Intel's x86 architecture, its government-backed U.S. manufacturing, and deep integration with NVIDIA's dominant AI platform. That's a powerful combination, especially with the growing push for onshore secure manufacturing. It's harder for rivals to attack that whole package.
Okay, the tech sounds potentially very strong. The competitive moat looks solid. But let's talk risks. Because no turnaround is guaranteed. What keeps you up at night if you're bullish on Intel?
The number one risk, always, is execution risk. Ramping up a node as complex as 18A with two brand new technologies on schedule and at volume, that is incredibly difficult. Any slip-ups there could be costly.
But isn't the NVIDIA partnership supposed to help with that?
Yes, that's the key mitigant. Having NVIDIA's world-class engineers deeply involved working side by side with Intel. That provides invaluable technical oversight. NVIDIA needs 18A to work for its own products. Their involvement significantly increases the odds of a smooth, successful ramp. It's like having the world's toughest customer also acting as your quality control.
Right, that makes sense. What other risks? Competitive response we mentioned.
Yeah, competitors like TSMC and AMD won't just roll over. They'll keep innovating.
We talked about the moat there. What about integrating these two companies? NVIDIA and Intel haven't always been best friends. Any integration challenges? Culture clash.
That's definitely a valid point, something to watch. These are two giants with proud engineering cultures and, yes, some historical rivalry.
So how do they overcome that?
Honestly, the sheer amount of money and strategic importance involved creates a powerful incentive. Both companies have so much riding on this partnership's success. NVIDIA's $5 billion equity stake means they are literally invested in Intel succeeding. Their long-term roadmaps are now deeply intertwined. It's less about past feelings and more about future necessity. It's a mutual dependency.
Okay, so bringing this all together, we've got the tech leap with 18A, the financial safety net from the government, and this massive strategic validation from NVIDIA. How does this feed into that strong buy thesis we mentioned? For people who are still skeptical after Intel's lost decade, what's the core argument now?
The core argument is that the landscape has fundamentally changed. The skepticism is usually based on Intel's past fumbles, the delays, losing the process lead.
Right. Fool me once.
Exactly. But this isn't just Intel trying harder. It's Intel with potentially leading-edge tech again, plus massive government support, plus its most important potential customer becoming its biggest partner and stakeholder. This confluence of factors directly addresses those past failures and risks.
So the argument is that the current stock price doesn't reflect this new reality.
That's the crux of it. The valuation, we'd argue, is still anchored to the struggles of the past, not the potential of this transformation. It's fundamentally mispriced for the future Intel is building.
And what does that mean going forward? Just the stock recovering or something more?
We think it points towards a significant re-rating. It's not just about the stock price bouncing back, it's about the market potentially recategorizing Intel.
How so?
Moving from seeing it as a struggling legacy IDM to recognizing it as a critical, advanced, US-based foundry and infrastructure provider for the entire AI ecosystem. As the Intel Foundry Services starts bringing in serious revenue, especially from blue-chip clients like NVIDIA, and as 18A proves itself, the valuation could start looking a lot more like a high-value foundry, maybe closer to TSMC multiples, but with that added strategic national importance.
It really is an incredible potential turnaround story unfolding. Just to recap, we've seen Intel's push for tech leadership with IDM 2.0, culminating in the potentially game-changing 18A node with RibbonFET and PowerVia.
Then there's the huge government backing CHIPS Act funding loans, tax credits, and that unprecedented direct equity stake, a massive de-risking factor.
And finally, this monumental partnership with NVIDIA. A $5 billion vote of confidence, deep technical collaboration for data center and AI PCs, and huge validation for Intel's foundry dreams.
You put all those pieces together, the technology, the finances, the strategic partnerships, and it really does start to look like what many are calling it a once-in-a-generation opportunity to invest in the comeback of an American tech giant.
The risks are there, execution is key, but the potential upside seems immense if they pull it off.
The mitigants for those risks are stronger than they've ever been.
So here's the thought to leave you with. Intel's past struggles seem to be fueling this radical reinvention. They now have incredibly powerful allies, NVIDIA, the US government firmly in their corner. Could Intel not just reclaim its former glory, but actually help redefine the entire semiconductor landscape for this new AI era? What could that mean for the future of computing? And maybe, just maybe, for your portfolio? Lots to think about.